first quarter result webcast. My name is Pauliina Tennilä and I will be hosting this event today. The speakers today are Incap's President and CEO Otto Pukk and CFO Antti Pynnönen. Otto and Antti will present Incap's first quarter results, and after that there will be time for questions and answers. You can post your questions with the Q&A function already during the presentation. And the recording of this webcast will be available on Incap's website later today. So I hand it over now to Otto Pukk.
Thank you very much, Pauliina, and thank all the people who are here today and are having interest in Incap as always. So I will start with as usual with Antti to go over quickly our quarterly result, and then we will have some time for Q&A as always, and hopefully we can answer all your questions. So let's start with the quarter. As we anticipated, we started a little bit slower in the beginning of the year. We ended up with 52.2 million in revenue and an EBIT % of 11%. So overall, being an EMS company, I think it's a good result, especially taking into account that the market is slow and very hesitant currently due to the different kind of tariffs and trade war prospects that are on the world market currently. We still believe that these things will settle and we will see a stronger second half of the year and believe in the development in that sense. So overall, we are happy with the result in the current conditions and look forward here to the coming quarters of the year. We kept on investing in our facilities, and we have done several investments during the quarter, both in US and India. We invested in SMT technology. Our UK team also installed a new second line, SMT line, that now is fully operating and implemented also vertical storage in their facilities to store PCB assembly materials. In Slovakia, we also upgraded our PCB washing technology and enhanced some complementation removal these capabilities, and worked with process automation and sustainability in general. And also in Estonia, we did investments and have now a brand new X-ray system to enhance our testing and control capabilities in Estonia. So overall, we keep on investing. We believe in having the latest technology and good technology level in the factories are important for us. If we're going to produce the latest and best electronics, then we should also have a good equipment to do so. So that is our philosophy. Sustainability, of course, is as always a big topic for us, and we now published our first CSRD compliant report here in April. And I think we are very proud of the work and the work that the team has done with that reporting. We have 50 people in Incap involved in our sustainability work, and we don't have anybody, of course, full-time employed only dealing with the reporting, but alongside their other work. And I think we have a good and interesting report, and I encourage people, all of you, to read it. So it's not just something that we produce that nobody have an interest for. I think it's good reading, and it's a core of very much of our values and how we work. So take the opportunity to read the report. Of course, we need to emphasize, as always, our fantastic people in Incap. Without them, anything that we do wouldn't be possible. And I think, as I said, we are happy with the result, even if it's a little bit slower one as anticipated. It's due in these market conditions. I think still it's a solid result, doing well in double-digit EBIT and keeping developing the business. And we couldn't do that without our great people that we have in the different units. So always hat off to our guys and girls in the different units. They are the one that doing the magic and in the end bringing home the bacon to all of Incap's shareholders. Antti, want to take it away and do a little bit numbers tracking for us?
Absolutely. Yes, if you move on to the next one, please. So here, basically Otto already summarized, so I'm not going to repeat the same KPIs, but the EBIT in millions of euros was 5.7. And then on the top line, I just want to highlight that there was still a growth, 1.6% growth versus Q1 2024. Of course, it's not like crazy much, but we take that one. Could have been worse, even lower than year before, as we have seen some other EMSs revealing their Q1 reports. So we take that one still. On this one, obviously we summarize and put together these revenue figures and also the profitability. So solid 11% double digit still. Of course, when the revenues are a little bit down, so it's always put some pressure on maintaining profitability, but I think we were also able to scale down some of the variable expenses nicely. We were focusing on that part of course when the volumes are a little bit down, and then still a good performance from there, I would say, in Q1. We also invested in some of the units for increasing material levels. So we have some companies and some customers with a good prospect still for the rest of the year. So we went back for investing indeed in material levels. That also showed actually in our operational cash flow in Q1. And then in end of March Q1 we had almost 65 million of inventory levels. Of course, if we look compared to the Q1 and 2024, so it went down this number, but the previous measurement point was end of 24, and there was indeed slight increase. I would say other items here, interesting, bearing net debt, very solid, very strong, -31. So keep in mind that our cash levels are far higher than what we have in interest-bearing debt elements, such as the loans and things like that. So yeah, we are financially in very good position there. And then on the personnel side, 2,554 is described here in the pie chart as well. So overall, I would say it was as anticipated by Otto and our team, that the year will start a bit slower, but then picking up gradually towards the end of the year.
So if you look at the outlook, we it remains unchanged. So we still believe that we are going to be larger than or higher than in 2024. And as we said, a little bit cautious in the beginning of the year, but we anticipate once these tariffs and different other geopolitical like tariffs and taxes and trade wars and so will settle, then when the market knows what are the rules of the game, then we believe that we will see growth in the second half of the year. So that remains. So we all have the steering unchanged. Perhaps a little side note for you guys as well. Incap, as you know, are engaged in different social activities, and we are proud that we are now launching our first esport event together with some of our partners, some partner colleges in both here in Estonia, but also in UK. And we will have a esport event on the 10th of May. There is still chance for you guys to register. I will be registering with one team, so you have a chance to shoot the CEO of Incap if you can find me and or fast enough, of course. So take the opportunity. There is good prizes and tell your kids 16 plus and onwards are welcome to join, and we're looking forward to see all of you guys on the battlefield with us on the 10th. So I must say good luck from my side, and let's shoot over to the Q&A session. Thank you.
Thank you, Otto and Antti. And I don't think, Otto, anybody wants to shoot you. So maybe I think that tariffs are one of the most important questions at the moment in general and for Incap also. So what was the main reason for the slow start of the year? You mentioned the tariffs, was that the only one? And then you also mentioned that they impacted especially the European units. Are they impacting also the other units? How do you see the overall situation now with the tariffs from Incap's perspective?
Yeah, the European unions were a little bit slower, and so, but I would say that the impact is global. Everybody is waiting for the tariffs and also what will be the game rules currently. There's a lot of talks, and it looks like the Trump administration throws up a lot of dust in the air, and let's see where it settles. Now negotiations are ongoing, and there is tariffs and so in place now as well. So I think that the market is hesitant because they don't know exactly what the rules are of the market. Once the rules are settled, there will be always a way for business and a way to move forward. So I don't think it's specific on the European units. We export to US, we have US factories, but also our customers for export to US. So there is of course an impact in indirectly and directly, but it's not unique for Incap. It's I think something for that is similar to everybody on the market. And as I said, let the dust settle, then we know. One thing is the rhetorics, and the other thing is what eventually comes into law. And now we have a few months break in that sense that we got this negotiation time. So let's see what our politicians and so do in EU and in other markets, and I'm quite sure it will settle.
Yeah, and in general, of course, if I a little bit reflect on this topic, is so that during COVID times, the material availability times when China was locked down, so there was a lot of companies who had used Chinese EMSs, and for example, it was common for US corporations to buy those services from China, and then they obviously started to consider other options as well, and moving production out from China, and some went back to US, and most went near shoring countries like Mexico and things like that. And again, I think now they are like getting hit by these tariffs in for example in Mexico or things like that. So there are a lot of some customers that we hear asking offers from our Pittsburgh site that Incap has a unit in Pennsylvania, and then I think there's just a lot of hesitation, and then as Otto mentioned, there is no clear rules on the market at the moment, and then prices tend to change, and some of these tariffs are put on hold, and then they are increased, and this is just making very difficult. Like Otto also mentioned, end of the day, end customers are paying the bill on these increases, and then again that is a negative cycle. So the prices tend to increase, the inflation goes up. We have seen interest rates coming down, and it's just an hesitation overall, which is also impacting our businesses here in Incap as well. That companies are a little bit waiting that what's really the geographical fit for our customers, where they should manufacture, as they are also optimizing. And also, let's keep in mind that many of the components still come from China. So no matter where you manufacture, you're still buying those from China. And then if you want to get your products to US, you still end up, of course, being paying those tariffs. So yeah, hopefully we see a little bit more clarity on this topic, and we believe that this will not take forever, of course. And then that's why also we believe in a gradual clarity on the market towards the second half and towards the year end latest.
Thank you. There's a question about the share of your largest customer and the growth excluding the share of the largest customer, and that wasn't provided in the Q1 report. So is it possible to give that number?
Sorry, which number was exactly?
The share of the largest customer.
Yeah, well, that's the thing. We don't disclose that, so it would be unfair to reveal it just on this forum as well, because it's not publicly disclosed. But overall, not too big difference what it was in the annual level 24, just to give some kind of idea.
So looking at the year end, what are your assumptions for the situation improving in the second half of the year? Is that regardless of the tariff situation or assuming cancellations of existing tariffs?
No, as I said, I think the assumption, of course, is based on our forecast and the input we have from our customers. But also I think that as I said, there is a hesitation in the market, and I think once that's settled, then we will see a more normal development in that sense. And so there is a demand, but people are a little bit waiting what kind of supply chain how to say they're going to use into for example the US market and so when it comes to bigger orders and so let's see once things settle then we see a possible increase in the market, and that we have said already with our last release, and there's we have the same message here. We believe in a stronger second half of the year.
All right. And you mentioned also the 3 factories and strong position in India as one of your opportunities, and maybe also relating to the tariff situation now, are there further opportunities for India and the US due to this? Could you elaborate a little bit more on that opportunity?
Yeah, sure. No, I think always that India, having factories in India, I think that gives us a great opportunity. Indian market itself is growing, and also India is the world's biggest democracy, and that sets it apart from many other or countries in the Asia that are not enjoying democracy, and so I think there's a difference having manufacturing in India compared to many other Asian countries by default. Also, if you look now in the tariff, now it's early, of course, the India is also negotiating. Trump administration flagged some 26% or so tariffs, I recall it correctly, on India as well. That is also now negotiated on some kind of whole pattern, but that is several times lower than Chinese ones. So I think there is a chance for a better deal out of India than we have out of China or perhaps some other markets that are hit with very low or high the tariffs. But it's early. Let's not jump any conclusions. I think long term it's great to have our manufacturing in India, and I think for sure that will be in whatever different kind of situations or crisis or whatnot. It's a great place to be, and we look forward to keep on moving. And then, as Antti said, when it came to US, the second part of the question is of course having manufacturing inside US in a situation like this is not bad in that sense. It gives possibilities, and we see that with quoting activity, and so it's very active currently in our US unit and in other units as well, because there's, as I mentioned, customers are looking at different kind of routes or supply chain to satisfy their needs. So I think Incap, it's all good. We have manufacturing in Europe, in the European Union, and outside the European Union. We have in US, outside US. We have in Asia, in India, and so on. So we're quite well situated in any situation.
And also like customer feedback, some of them have clearly expressed to Incap that because of these uncertainties on the market, they are actually at the moment selling directly from their warehouse and stock levels. So of course that will bounce back at some stage when the stock levels are too low for the customer, that again they need to start ordering much more to fill them up and be on the safe side. So there could be some cyclical bounce back coming up in the near future as well for these kind of customers that have expressed what they're doing.
All right. Then there's a question about order intake, which is a number that you don't publish, but can you comment somehow on how did the order intake develop in the first quarter?
Yeah, we don't disclose our order intake number and so, but of course, what to comment, our order intake, it supports that what we believe in that sense is that will have a stronger second quarter, and so we have no reason not to keep our steering and keep on believing in how we see the future. So order intake, other numbers, of course, support what we are talking about here today. Otherwise, we wouldn't be talking about it.
Otto, maybe on this question, visibility of the market at the moment, have you seen lately developing in some direction when it comes to that one?
No, I think visibility is similar to what we had last year, and I think after the component crisis here, visibility windows shrunk a little bit. We've been talking with investors about that in the past, that this is what we also expected, because our customers are smart. There's no need, if there's no need for have long visibility, like too long visibility, they won't have. And it's the same now. I wouldn't say that visibility have changed. So we have quite good visibility when it comes to the coming months and the, how to say, the coming year. But these kind of crazy long visibilities like we had during the component prices, like 24 months or even longer at some point. So that those days are over, I think, for everybody in the industry.
Maybe moving on to a question about the inventories, and is that a signal to seeing growth, that your inventories are growing, and maybe a related question also then to Antti about the cash flow situation a little bit in Q1. Could you explain a little bit about that?
Yeah, well, I a little bit opened already this topic that we have acquired more materials in Q1, and then obviously materials are first needed in order to get the future turnover and revenue, and of course those products ready for the customer. So yes, in this market situation, I agree it's a signal of future volumes. So that is something, and then also of course that then impacts on the operational cash flow that we also reported here in the Q1 report, and then there was the impact of course on the other net working capital items as well, mainly coming also some negative impacts on the payable side. So then we reduced the levels of mainly supplier invoices, and that payable number went down, and that impacted, but it's just normal business fluctuation and nothing special there in my opinion.
Thank you. And how about then the M&A market? How does that look like, and are the valuations on a supportive level, and do you have any geographical focus at the moment?
No, we have the same geographical focus that we have had here, so we are still looking actively, of course, on the US market. I think, as I said many times, we have our foot in there now, but there is plenty of room on the North American market. So that, of course, remains one of our focus markets, but we also look in Europe and Southeast Asia and in general. So it's not so that we exclude. What we can say is that the market is more active. There's more cases out there that we are evaluating, and of course, the more cases there are, the bigger probability is perhaps to strike a deal. Evaluations are still, it takes two to tango, as I have said many times. So we are quite sure and steadfast with what we believe is appropriate to pay for companies when we're evaluating them and using our financial models and so to evaluate them. But there is always two sides to it, and a lot of emotions as well sometimes when it's privately owned companies. So let's see. I'm still hopeful. We have a good pipeline. We have an excellent team working on it. We have the past years landed two great acquisitions, and I'm able to integrate those very successfully. And I'm quite sure that we continue to do that, and that we do it in the future as well, without stressing, without going into this bad decision making. Just for the sake of making an acquisition. It's not about that. It's about creating value for the shareholders, and that is the key, not to buy something just for sake of buying.
Thank you, Otto. I believe all the questions have been now addressed, and thank you from my side to everyone for good questions and being active. So, Otto, would you like to summarize still once more?
Yes, that I will. So once again, thank you everybody here on listening into this webcast, and thank you for the interest of Incap. We're always happy to speak to investors and analysts and so when of course we're not in the silent period, but otherwise. So reach out to us if you want to have a discussion. We're always happy to do so. And as we say many times, come visit our facilities and look what we're doing. We're always proud to show that. Most important, the 10th of May, Incap Legends. We expect at least one investor team to participate. So please sign up and have a chance to challenge us in both in management, but then of course there will be a lot of kids or young players there and that are more or less professional that will do the best of both of us in that sense. But take the opportunity. And once more, thank you very much, everybody, for the interest of Incap, and looking forward to speaking to you again here with the next quarter release.